Today, Fraudboxer welcomes a new sponsor, Darwinium. Darwinium brings their next-generation fraud prevention platform that unifies security with fraud prevention to create complete visibility of customer journeys across every digital touchpoint, web, apps, and APIs. Darwinium's unique integration point running on the perimeter edge via CDN brings privacy preservation and low latency, giving a holistic view of customer behavior from pre-authentication through account creation, login, change of details, and even payments. This means businesses are better equipped to separate human and automated traffic while protecting customers from account takeover, identity scams, and social engineering behaviors, blocking content and promo abuse, and of course, fraudulent payments. Please visit www.darwinium.com to learn more today. Direct links will be in the bio of this episode. Hey everybody, welcome back to another episode of the Fraudboxer podcast. I got a heavy hitter here today. I got Julie Conroy from Datos Insights. How are you doing today?
I am fantastic. How are you, Jordan?
I'm doing pretty good. You and I met about 8 years ago, I think it is now. We were on a panel together back in New Orleans at one of the smaller MRCs. Had a lot of fun there. We had I think Bryn on there that used to be at Spokio. It was my first time in New Orleans. That was a fun city.
New Orleans and the food. It's such a good food city.
It's a good, different type of taste, and I was welcoming it because I'm so used to cheeseburgers and hot dogs all day. It was nice to have some spice in my life, and it's changed me forever. I did see you talk about faster payments more recently in May when I was up at the RSAC conference. They had a little side conference that was part of it called the EFG, and it brought up a lot of memories of that. I wanted to talk about this. This is something that I've been wanting to talk about for a long time. I think the whole thing surrounding faster payments, we've been hearing that faster payments is coming for so long, and we've seen some of it, and we'll get into that. And I'm really excited to have you on here because you did an excellent panel there about faster payments. So yeah, you want to talk a little bit about that one?
Absolutely. It's a topic my team and I have been spending a ton of time with, as you might imagine. We said it on the panel, and it's cliche, but faster payments does truly equate to faster fraud. And the fraudsters have been following the faster payment rails across the globe. We now have going on 60 faster payment rails across the globe, and the fraudsters, they worked out a very effective set of attack vectors in the UK, and it's been rinse and repeat ever since.
So we'll get into that in a moment because that's already getting the wheels turning in my head. But before we dive into there, I think a lot of people that are going to be listening to this probably already do know you. A lot of us in this industry do know you. We read all the stuff that you put out. But if you could just take us a little bit about through who you are, where you came from, and how you got to be in the wonderful world of payments and fraud, if you could.
Yeah, so I am the head of risk insights for Datos Insights. Up until June 21st, we were known as Aite-Novarica Group. So that's where Datos might not be a familiar household term yet for the folks on the line. But I've spent my entire career in payments and fraud. So I started at a startup that was enabling ACH and wire payments for things like Wingspan Bank, totally dating myself for those of you, one of the very first online properties. We were enabling online payments for folks like Ariba back then. And as you might imagine, the fraudsters were having great fun with all of this brave new world of internet payments. I went on to work at one of the first pure play online credit card issuers. And again, we saw—
that was probably fun.
Oh my gosh, so much fraud in that environment. And then from there, I went on to lead the product management team at Early Warning Services. I had been talking to them as a potential vendor when I was at the online credit card firm, and then went over and Early Warning. I spent a number of years there. It was fun managing a collaborative consortium-based data product set, and then from there, came over to Datos Insights, where I manage a brilliant team of a dozen people that look out for how the industry is responding to the emerging attack vectors, regulatory infrastructures, changing technology. We all come out of industry, and now we bring that expertise to bear to help our clients.
Excellent, excellent history there. Thank you for that. I've obviously followed a lot of the stuff that you've done, and you've done like compiled a lot of like documents about as these things change, like you said, like updates on like chargeback things, updates on different regulations and things like that. That's been super useful for us in an industry to have these things and know about these things. I think a lot of the stuff, we do these conferences, we get together in a room and we ask for these things, and we ask for changes, and then when some of the companies implement those changes, they may or may not be exactly how we wanted them to be, but it's nice to have resources that can kind of peel back the layers of what they did change and how that's going to affect us. And you've always been helpful with that. So let's talk faster payments. We're just going to dive right into it because there's a lot to cover here. So if you could, for me, describe what faster payments actually means. That way we can really break down the actual definition, please.
So faster payments is, generally speaking, it's an alternative payment rail versus your batch payments, which go across ACH, versus your card payments, which go across the various payment network rails. And it is a payment rail that has been designed to deliver funds transfers immediately in a non-refutable manner. And it's the purpose of this is to create additional utility for consumers, for businesses, by facilitating faster movement of payments.
Yeah.
As I said in the open, we're now up to going on 60 countries that have faster payments rails. Here in the US, we always have to do things a little differently. So we've got RTP active, we've got FedNow, which is an entirely different payment rail, which will come active over the summer. And then we've got Zelle, which is probably the most known household word around faster payments in the US market. What most people don't know is that Zelle oftentimes actually settles via ACH in batch.
Yeah. They just push it out faster, but there's still stuff happening in the background. And I was going to say, like, I think like most people would think of faster payments like on more of the P2P side of it as the Zelle processor. Now, I want to talk about when this conversation that you and I are going to have today, we will talk about, of course, the P2P side of it, but also the how this can affect businesses too, right? Like this is going to change how settlements are done from a B2C standpoint too, if I'm not mistaken, right?
There's a ton of B2C utility in faster payments. There's also small business utility. Think about B2C, your gig workers getting paid in real time, immediately, not having to wait for, a payroll cycle. Or, you're from a consumer perspective, getting insurance claims via faster payments as opposed to having to wait for months for that check.
Yeah. And I want to point out like Venmo and PayPal are not faster payments. Those are just regular. They use ACH essentially, don't they, in the back end behind there for the most part?
They typically will similarly use those ACH rails, but again, with Venmo, your consumer experience feels like faster payment, and where it has the commonality is, typically just like other faster payment rails, you don't have the power of repudiation.
Interesting. So, if I'm not mistaken, like to have a faster payment, like I'm just going through all these things that I've even like the research that I've done about it, is you have to have what's called a DDA, so a direct deposit account. So that has to exist on either end in order for a faster payments situation to happen. Is that right?
Yeah, yep, that's absolutely correct.
Excellent. So like Venmo and PayPal, since they don't have a DDA, they don't count as that. But Zelle's, which typically most people on the consumer side of Zelle have that in their actual bank account, which you can receive your direct deposits in your bank account. So that's how you get that.
Yeah, and as you look at some of the markets that have had the greatest success with faster payments, India and Brazil are actually at top of the list from adoption and volume perspective. Those are also markets where there's been a concerted focus on getting a universally banked population, which creates the necessary ubiquity.
Interesting. So let's talk about that, because my mind just instantly went that way. So universally banked population, what does that mean? So does that mean the government is trying to make sure that every citizen has their own bank account?
Yes, and India started. and Brazil kind of took their roadmap and has emulated it. Brazil is a super interesting story that we delved into in our recent research on this, where they launched their faster payments rail called Pix in
Yep.
November of 2020. Within a year, Pix transactions had eclipsed payment card transactions from a volume perspective.
That's amazing. I love
It's
Pix because I don't have liability when people use Pix payments on my site. So I love Pix.
and one of the ways that the Brazilian government encouraged rapid consumer adoption was November 2020. We were still in the midst of the pandemic, and Brazil started sending their stimulus payments via Pix rails. So all of a sudden, everybody wanted to be on
Interesting.
Pix.
Yeah, that would make a lot of sense actually right there. And I think it was like one of those opportunities too where like the central bank of Brazil, like they all got together and said like you have to do this. We're doing this. Or everybody's working together. We're making this one thing be the one thing. And I think like people like think that Zelle tried to do that, but Zelle's like kind of like a weird thing in between, like, but it's still its own company, right? It's a third party company that the banks just opted to decided they're going to use, if I'm not mistaken.
Well, and Zelle is owned by Early Warning, which is
That's right.
owned by seven of the largest banks in the U.S. market. But it's still, in Brazil, you've got a consolidated banking market. You've got a very strong central bank regulator that did mandate it. They said that if you are a financial institution that has more than 500,000 accounts on your books, you have to enable Pix for your customer base. And
Yeah.
by contrast, here in the U.S., we have a highly decentralized regulatory infrastructure, and we've got upwards of 9,000 financial institutions. So it's
That's that's a lot. And it would have
yeah.
to be a full mandate. And then we all know what happened when the EMV mandate happened, and it's kind of people still kind of kick the can down the road a little bit there. So I want to kind of back up a little bit because I think that the Pix thing is super interesting and I love it. And it was on my list of notes that I did want to bring up. So I'm happy that you brought that up. But let's talk about fundamentally how these things work. So you said earlier that there's about 60 different sets of rails. So when we talk about sets of rails, we talk about an underlying infrastructure that actually facilitates, like the money actually travels along, correct?
Correct. Correct.
So is when faster payments is being created, like a system, a set of rails is being created, is there a governing like body of some kind that says this is what it has to do, or is it all based on time alone on that? And anybody in the middle, they could build that any way that they want to.
Now there's governing infrastructure. So it's the technology infrastructure perspective. You also have the governance perspective. Both of those are super important as you're launching things like this. And FedNow, they've built the technology, they've established governance. The RTP rails in the U.S. are run by the clearinghouse. And again, they spent years building out the technology infrastructure that banks connect to, as well as establishing governance rules.
So in the US, there are three major sets of rails, right? There's the FedNow rails, the RTP, and then the Zelle set. Is that right, or am I
Well,
wrong on this one?
you can't quite call Zelle its own set of rails. It appears that way from a consumer perspective, but from a back-end settlement perspective, Zelle settlement either rides the RTP rails
Yeah.
in an increasing number of cases, or it's settled via ACH.
So they're just like basically, like I said a little earlier, they're kind of fronting the money into my account while they hope everything clears on the back end.
Exactly.
Yeah,
Exactly. Yeah.
got it. So do you think now with FedNow, let's go right into FedNow because that's the one that kind of started me down this path when I wanted to start making this episode was when they made the FedNow announcement. So FedNow sounds like it's government, Fed, right? Is it? Is this going to become mandated? RTP, like what about them? How are they going to play? Is this going to be like Highlander at the end of the day where there can only be one in the US, or is there a world where several sets of these rails do exist in the US?
I foresee that we will have multiple sets of rails, or at least two sets of primary rails in the U.S. And again, we're the only country on the planet that has the degree of fragmentation in its
Mm.
financial services market as we do. The genesis was the clearinghouse is owned again by many of the biggest banks in the country. And there was some agitation from smaller financial institutions that it was too expensive for them. They were getting left out. They were getting left behind. It was unfair competitively, and that was part of the genesis of the Federal Reserve Bank. It is run by the Federal Reserve,
Mhm.
developing a separate set of rails. And as you look, and it's publicly on their website, as you look at the 130 pilot participants that are currently in that FedNow pilot, a whole bunch of them are smaller financial institutions.
Now,
There's some bigger ones there too, but this was intended, I believe, to kind of try to level the playing field for some of the little guys.
so is this going to, at the end of the day, is this going to be something that is going to, like, we're all just going to get opted into immediately? Or is it going to, do we have to go into our bank and say, if they're a participating bank on the Fed now, that we have to opt into, and then everything coming into our account and leaving our account, if it's available to go on those rails, will go on those rails? Or will it just automatically start happening and stop moving over ACH?
I think in the near term, a lot of this is going to be transparent to your average consumer. As a consumer, right now RTP is mainly doing B2B. It's all commercial business. And so as you are looking for things like, getting your insurance payment deposited into your account in real time, it's not going to be talking about the rails. It's going to be talking about, hey, you're in luck. You get to get this in real time. Look at what a great insurance company we are that we're enabling this for you. So
Got it.
the mechanisms in the back, just like, most consumers, they know they get their payroll deposited via direct deposit. A lot of consumers don't know those ACH rules that, enable that to happen.
So let me ask you a little bit here, just now that my head's thinking again, is I am a member of one of the banks, not a meta bank, a real bank, that gets my direct deposit via that way, but I get it a couple of days early. Does that have anything to do with RTP rails in any way, shape, or form? It's just my bank
It's a
just
product.
releases it to me.
It's a product offering where they are looking to be competitive and give you, that early access,
Yeah.
and they are bearing the risk associated with that. So it's essentially
Interesting.
providing credit to you
Because
for
they
those
just see,
2 days.
like, for years I get the same amount deposited, and they're like, here you go, you can have it a couple days. Because when I did switch jobs, it did take a couple of weeks before, a couple of paychecks before I started getting it again, which I didn't really care, but I just thought it was like super interesting that they did that. But I will say that when is I send a large chunk of my paycheck to my savings account at the same bank, and that one doesn't get deposited no matter what until the exact day it's supposed to. I don't get any early payments when it goes to the savings,
Oh
I'm
yeah,
missing
because
out on a couple days of interest
they'd
though.
be paying you interest.
Yeah, that's what I figured, especially because, like, it's like a 4.1% interest right now on that savings account, and they don't want that. They can't have any of that. So let's talk about FedNow. So where did FedNow come from? Did we know they were making this? Did they just kind of like surprise us with this thing? Like, what happened with FedNow?
Oh no, it has been in the works for years, and it's a topic that my team and my colleagues on our commercial banking team have been following for years. And it started in typical government bureaucracy ways. There was a request for comments that was issued by the Federal Reserve Bank, and then you've got a period of response, and then you've got meetings where people come together and talk about it. And so this has been in the works. I can't even remember how long, but it has been many years that this has been coming.
And did they build it themselves? Is this running on government servers, all that fun stuff? They didn't farm this out to Google or Amazon or anything like that to have, like, they didn't buy a payments company. They didn't like do anything like that. They really built this themselves
This
after all
this
this.
this is owned and operated by the Federal Reserve Bank.
That's really impressive. I'm not gonna lie. That's pretty impressive for never would have thought. And I think that FedNow, when they made the responses, like, or when they made the announcements, they made a big deal about to focus on fraud. And that's a lot of my listeners obviously were worried about fraud, think about fraud. So let's talk about fraud on faster payments specifically, because where there's, like you said at the very beginning, where there's faster payments, there's faster fraud. And I think FedNow, they kind of talked about that they were having fraud protections and there was going to be certain guarantees, but they didn't really talk about what they were doing. To me, it kind of sounded more like velocity limits, or looking at where origins come from, where it's going, where payments are, like it seemed more like pretty basic stuff around it. So what are your thoughts? What are your opinions on all the fraud piece of this?
So I think there will out of the gate be some velocity controls at the network level, but aside from that, primarily the fraud controls are being delegated to the participating banks. And so just like participating banks need to make sure that they've got good controls in place to protect themselves from RTP fraud, which I was actually on a call with one of my bank clients just a few hours ago, who was talking about some of the pain that they have been experiencing with RTP rails. It's going to be mostly, at least out of the gates, it's going to be a delegated approach.
Are we able to, as like, let's say that my company wanted to use faster payments in some way, are we able to put any sort of fraud rules in, or fraud tools in that flow at all? Like, let's say I was an issuing bank, and I can I add my own fraud rules in, or does it come prepackaged? What RTP gives me is what I get at the end of the day.
No, as issuing banks, they have a lot of their own fraud control framework specifically designed around RTP. And actually, in the study that we did, we published it 3 months ago, one of the questions we asked all of the participating banks was, do you expect to be making significant investments in your faster payments control framework over the next 1 to 2 years? And the vast majority said, yes, absolutely. It's a key point of investment for us because, again, RTP didn't launch that long ago in the grand scheme of things. And, the fraudsters have definitely found that one as well.
Does RTP stand for real-time payments?
It does.
What it means? Wow,
which is a little confusing when you start talking about this on the global level, because RTP is a brand name in the US, but as you get outside the US, people also talk about RTP, but they just mean the faster payment rails in their country.
So let's kind of talk a little bit about some of those in just a moment, though. One of the things I did want to talk about, though, was on the, like what you just said about the banks that they're going to make significant investments in the RTP system. Is there an upside for banks to do this outside of satisfaction of customers? Like, what would be the upside versus going over the legacy ACH? Because to a bank, it doesn't really necessarily matter if I get my payment a day or two quicker or 3 days quicker. Does it? Like, what's the upside for an issuer?
So from a bank's perspective, why you engage in these things in the first place is it's a competitive issue. So you don't want to be the bank that is sending payments slower than all of your competitors, because as you're trying to keep your corporate and small business clients happy, as you're trying to win new ones, having the ability to connect to these rails, send payments on these rails, it's a major competitive issue.
Got it.
The bank I was talking to this morning that said that they're having fraud problems, and he's currently declining a lot of RTPs. He said, my business partners are not happy with me right now because we are being somewhat draconian because of the rash of fraud.
I think that that was always going to be the case. Like, I mean, you even see like when Zelle first started, it was slow to adopt for regular consumers, and then it got more popular, especially during the pandemic and all that. But there was like that time where like the vast majority of the traffic that was going across Zelle was fraudulent and scams. It was like people losing their money. And I'm not saying anything bad about early warning or Zelle or anything like that. It's just like, it's what happens when a new technology is released and we all are trying to figure out how we're going to settle into using it at the end of the day. And we don't know what our baseline is as far as people love to say like X percentage of transactions that was going across Zelle was bad, but that doesn't necessarily mean anything really negative at the end of the day if it's being stopped, because that's their baseline. For example, is like, as long as it's just like a website has 99% of the traffic is bots, but it's being blocked, like that's the normal world. Like I think I saw somewhere like 76% of the internet now is bots. So the vast majority of traffic on your website is going to be a bot at the end of the day. And just to put that one fact without saying, okay, what's the rest of the whole story, doesn't really necessarily paint the correct picture of what's really, really, really happening. So if this bank that you're talking to is saying like, well, there's a ton of fraud coming across attempts and they're blocking it, like that's great that they're blocking it, but that might be when we settle into this RTP Rails full time like faster payments. We don't know that like X percentage of our traffic is going to be bad traffic just forever. Like there's always going to be attempts. What's that level of attempts? Does that make sense?
It does, and actually the vast majority of the traffic going across Zelle has never been fraud. It's, I mean, a lot of the fraud makes the headlines. And
Yeah.
granted, we did some studies when Zelle first launched, and the bad guys were laying in wait. At that point, they hadn't really moved the scams attack vector over here, so a lot of it was ATO.
Mm-hmm.
And part of the success of that was just the fact that they were taking tried and true tactics from back when Apple Pay was first launched, and taking those
Ooh.
tried and true tactics and applying it to Zelle. And
I got hit hard on
um,
Apple Pay fraud when that first started at a one of my old jobs. Real hard.
oh, that launch was brutal. um, but I think we're the good thing about the UK having been on the scams front lines for so much longer than other countries is we've been able to take some of the tried and true tactics that they've used and apply them here. And it's things like sometimes you got to slow down faster payments,
Yeah.
and so there's quite a few banks here now that if you're sending above X dollar amount to a net new payee, we're going to slow it down for you. We're going to like put in a 4-hour cooling period. We might send you a text and just say, are you sure? And, just some of those, just
Yeah.
non-technology based, but just human nature based things are actually, they're somewhat effective.
Yeah, and I've seen like even because I do use Zelle, and I see the change that they've done over the years of like displaying the information like on the phone numbers of who the recipient is, just putting more hurdles in place that and more are you sure's I think is the right way to go, because especially people that don't work in this world, like the people that are probably listening to this podcast will be aware of all of these things that are happening. There's plenty of information out there, but there's a lot of people that aren't. There's a lot of people that get these requests, get these phone numbers, or send to mistype a phone number while they're trying to send a Zelle payment, and it just goes into the ether. I had one of my friends just recently texted me about it. She's like, I sent money to the wrong person. What do I do? And I was like, did you click OK? Did you see the name and you agreed to it? She's like, I did. And I was like, that one is gonna have to be one that's kind of on you. I did my best to try and find somebody over there, but I don't have anybody in Early Warning anymore. And it's just like it's one of those where if you go through it, like it's kind of on you. And that's actually leading me to the next part is
I will say, I
liability.
mean, this is not limited. I've been in fraud almost my entire career, and my dad did that to me via Venmo. He's like, "Did you get the money?" I'm like, no.
No.
So it happens all over the place.
Yeah, and I do like, like I think some of the stuff where like you could see QR codes and things like that, so you're physically with the person. But as we all know, during the pandemic, QR codes can be manipulated, and money can go different places there. But I mean, there's options, and there's work, and I love that the work is ongoing to try and save people from themselves, as I always say, save people from themselves. I remember I used to cut people off when I was at the movie ticket company way years ago, and like on and a certain number of tries in a certain number of times, like or over a certain amount of time. And I was like, look, at some point, just like you said, at some point we got to tell them just to sit down, cool off, think about what you got to do here, and then come back with like a little level head, and then we'll get you what you got to do and get you going on. And if you really can't bend, then we might just need to send you to the box office. But at the same time, we got to send it to the bank. But let's talk about liability. So I think that's always been a super hot question. And I think there's been a decision, if I'm not mistaken, in how liability is shared in RTP payments or in faster payments. Am I in the right ballpark here?
There has been nothing
Okay.
announced yet. There was some guidance that came from Zelle quite a few months ago now. my knowledge, not official yet. The guidance was still pretty opaque. As I talked to banks,
Yeah.
they still think it's kind of opaque, but there was a general consensus that there will be some sort of shared liability at some point.
Yeah, that's okay at some point. Because that's what I've been hearing was one of the things that was going to be, because people were getting, the wrong people were getting too involved. So there was going to have to be something that happened where, which I think is interesting. Like I always like 3D Secure. I was always a big fan of like putting some sort of onus on authentication back to the issuing bank. But in these types of like push payments, and push pull payments, I think it's different where the issuer is kind of just agreeing with what the initiator like is asking them to do, right? At the end of the day.
Well, and it's this is such a hard attack vector to stop because for more than a decade now we have we've designed our control frameworks around detecting unauthorized activity, and now this massive attack vector is convincing people to send authorized payments, and determining that intent is really hard. But conversely, on the receiving bank side, the one that's receiving this money, it's going into a mule account.
Yeah.
And you've got a lot better chance to deploy analytics techniques to figure out that this is a mule account. There's something wrong here. So that's where the shared liability comes in, is creating business cases for people to invest more heavily in mule detection. We're taking a page again out of the UK book. There is regulation currently going through, and everybody that I'm talking to says we'll probably see it go into effect first quarter of 2024. That will put 50-50 liability for APP fraud on the issuing and receiving banks.
And do you think that when that happens, that, like you said earlier, there will be a slowdown of faster payments from those two sides at that? Like, and I'm not saying like slowdown of a day or two, but like some more of like how we think of manual review in our fraud world, where there's going to be additional checks that it's not going to be there in a second. It's going to be there in 15 seconds, 10 minutes, that sort of thing. Do you see anything like that happening?
I think we'll see something that's more of a, kind of a refined approach versus a blunt tool. And I think we'll see that, your folks that are going to win in this from a customer experience perspective are going to be those that deploy analytics that can figure out that, Jordan sends his brother, money every 3 weeks, and it's always within this amount, or he sent his brother money 20 times over the past 3 years. And so sending money to his brother, that's no biggie. We're not going to put friction in there. But if it's a net new payee and it's more than $200, then we're going to slow it down. We're going to put in friction.
That's funny. I did another episode where I talked about like how Zelle always annoys me when I send money to the same person. It's always asking me the same question. And I'm like, I've sent money like 100 times to the same exact person. Like, it doesn't need to ask me anymore. But, I understand where they're coming from when they do it, and I only got to type in like their phone number. I think it's not that big of a deal, But do you think that the faster payment providers themselves will offer more robust fraud tools themselves, or will they always keep the ability to choose on the issuer and the receiver side?
Yeah, given my background, I am a huge fan of collaborative solutions, and I do think that there is opportunity in all of these payment rails to take a more collaborative approach, especially to the mule detection.
Yeah,
because that's something at the network layer. You've got visibility into this.
100%. So I always, it's funny because when I was at the ticketing company, the other ticketing company, the big one, we would look at catch-all accounts. We would like, it wasn't so much like who's getting into these accounts. It's where are the tickets going when they're sent out of the account. And then you'd find one account that had like 6,000 tickets on it, and then, that's your mule account right there, like it's your catch-all accounts. So you need to look at like where, not just the outgoing, but who is receiving it, and is it all the same? And that way you can kind of funnel down, like if this account is receiving payments from 6,000 different people today, like they better be a business, or they better have a hell of an Etsy store at the end of the day, like something's going on with these accounts. So yeah, I think that there's a lot of like, I'm happy to hear that you're saying that they're aware of these mule accounts and doing things to do that.
Yeah, and historically, it had been tough for a lot of financial institutions to make business cases for robust technology for mule detection, because it's not your FI that's losing the money; it's the one upstream. You're just catching it. But we started seeing a number of FIs stand up mule detection operations during the pandemic when we saw so much stimulus fraud,
Yeah.
and there was I think trepidation that if the government ever wanted to call somebody to account for the hundreds of billions of dollars that were stolen via stimulus, not the government won't admit that it's because they had entitlement gaps that you could drive a truck through and the fraudsters made full use of it. But there was an argument to be made that we had all these mule accounts get stood up in the system, and if you have all these mule accounts in your books, how well do you truly know your customer? So a lot of banks did stand up operations to have more active mule detection at that time. And then, the scam apocalypse has ridden the rails of, the stimulus and is now lighting up all these mule networks to exit scam funds. So I think it's a little bit of an encouragement that we are now seeing, in many cases, not enough, more active detection and shutdown of mule accounts.
So do you think let's say just to get more practical applications as we begin to close here, let's say right now, if I pay my Chase card or my American Express, for example, those cards, granted the money comes out of my bank account the next day, but is there ever a world where I go in, I pay my American Express and the money's gone from my account in a second, just instantly gone from my account, and then my balance is reflected on my American Express, my balance is reflected in my bank, no more of this floating like we used to do in checks in the 90s. I'm old enough to have written checks in the 90s almost. Things like that. Or even I'm trying to think of more practical applications, for businesses. If I need to pay a distributor right then and there, I have a bar and I need to pay the liquor, I could pay him right then and there. It's right out of my business account, right into his account. And no more checks, no more craziness, just all digital all the time. Or if I wanted to pay that same bar, I could pay my tab. The money's gone from my account instantly. No pending, no nothing. Are these where we're going with these sorts of things?
This this is that's all part of the promise of faster payments. That's why we have so many countries that are going down this path, is to create that kind of utility for businesses and consumers. Also to bring down the cost of payments.
Yeah.
So that is, a stated goal of a lot of these governmental initiatives, is to get it to, I think the average Pix transaction is, you're looking at 10, 20 cents per transaction. And so bringing down the cost of payments is another key thing and another key benefit theoretically to all of society, although those savings don't always get passed along to the consumer.
Yeah. I've been still waiting to get trickled down on every day, but at the end of the day, but being on the merchant side, we just did a huge RFP with our payment processors, and so many things came into it: cost of pages, interregional fees, FX, cross-border fees, all of these different things. If we could find a way to simplify the process, instead of having to route through certain banks, change currencies, and come back across and settle in this currency, if we could find a way to route these things a lot quicker, I think at the end of the day, we all would benefit, both on the merchant side, on the consumer side, and on the banking side. The banks don't want to have to deal with 15 different, partnerships, right? They want to have their rails, just money in, money out. Here's the liability, call it a day, right?
Yeah, we're unfortunately still a ways away from that interoperability. It's part of the vision for a lot of these, but there's still a lot of silos of payment rails. I would say one, the UPI out of India, they've been wildly successful with those rails, and they have over 300 association discussions in process with either other countries just to expand the UPI and we'll run your faster payments for you, or creating some of that interoperability. So that would be the vision of having this kind of global network of interoperability. But we're still a ways away from that, unfortunately.
I was super fascinated when you said the India thing, because that historically was an underbanked population, and the fact that now they have this amazing technology is pretty cool. And I think as the world moves more into these super app situations, especially they have in the APAC region, having things like a faster payment to move between things inside those apps and then buy things, using those apps could be really, really, really beneficial to the world. Like I really hate paying cash for anything anymore. And if I had options to like, if some way somehow to tip like a valet or something just with a tap of my phone real quick here, and he instantly has that money so he can go get a cocktail later, hopefully not when he's driving my Ferrari, but hopefully later in the evening. But that would be just such a cool world to be in.
We're getting there. I was actually at a restaurant. I remember where it was. I've been so many cities lately, but there was a server that she had a QR code that if you wanted to tip her using a QR code, that was how you did it, which I thought
that
that was so cool.
that is where the world needs to go. Like I feel so bad. Like I was just coming back last week from Nashville, and I had I had to plan ahead because like I had to tip like the guy that puts my bag on the bus and takes it off the bus, at the airport. I had to tip the guy that brings my car around at the parking garage and all of that. And I had to plan all that. I would love if I just could do it because I just hate carrying cash. I hate so much. And even like the musicians and stuff in Nashville have caught on to the QR code thing. They put it on the corner of their screens. They put it on their buckets. There's a local musician here named Trevor Daniel. That's great. That like I literally came home and printed out his QR code for him so he could stick it on his bucket. So all these guys are on digital payments, like let's get the rest of the little folks on there that they can get theirs too.
Exactly. You just got to watch out for the fraudulent QR codes.
Yeah, sticking it over things. That's why I see Trevor still rocking the same paper that I printed out for him. He's gotta fix that. He's gotta frame it. But all right, so wrapping up, we just got like 2 or 3 minutes here, max. I always ask everybody the 3 things. So let's talk about what do you think the future 3 things are, like the next big things for fast payments? Like what are the next things that are coming that we're all going to be able to see? How are we going to see it? That sort of thing.
So liability shift, we will see it this year. I was not at at Nacha Payments a few weeks ago, but I've talked to a number of people that were there that said that the CFPB essentially said from stage, we're going to see a liability shift in the next year here. So that's coming.
Huge. That's huge.
Yeah. So that's the big one, number one. While nobody loves seeing, regulations causing you to make massive changes in a short period of time, I have talked to some of my bank clients since then that have said, this essentially will give me the business case for all of the mule detection technology I have been begging for the last 2 years. So I think that is a great silver lining and opportunity. And then the last thing we need to see in this space is greater collaboration. And, it's the best way to detect mule networks, the best way to detect scam-based activity is through greater data sharing, greater collaboration. We still have privacy regulations, lawyers in the way, but we need to figure out how to get past that sooner because that's slowing us down.
Most of the collaboration is done in the happy hour cocktail party, at these conferences. The unofficial collaboration happening there,
or the super unofficial collaboration that happens on the dark web among the bad guys.
Yeah, they're better at coordinating. They got less legal red tape there. They're better at coordinating. Well, thank you so much for coming on here. I know it was kind of shortish notice where I asked you to do this, just passing at the conference. Thank you for taking the time to do it. Your time is extremely valuable. It meant a lot to me that you're doing this. I hope that my audience learned about faster payments because I don't know if everybody even really knows that faster payments is coming. So I hope folks learned a thing or two. And I encourage anybody in my audience to go add you on LinkedIn and just watch your posts. If you see you at a conference, attend your sessions and learn more about what's happening in this space because it's a fascinating space and it is the future of what you're doing with payments, everybody. So, yeah.
It was a pleasure, Jordan. Thanks for having me.
Anytime. I want to thank Darwinium again for being our next sponsor. Their next generation fraud prevention platform unifies security with fraud prevention to create complete visibility of customer journeys across every digital touchpoint. This unique integration, running at the perimeter edge via CDN, preserves privacy while maintaining low latency and giving a holistic view of customer behavior from all touchpoints, including pre-authorization, account creation, login, change of details like email and address, and payments. This means businesses are better equipped to separate that human traffic from that automated traffic that we're always chasing, while still protecting consumers from account takeover, identity theft scams, social engineering scams, and also blocking content and promo code abuse on our sites. Of course, they also detect fraudulent payments. Please visit www.darwinium.com to learn more today. Like I said at the beginning, I will provide those direct links in there. It's pretty cool what they're doing, so I really encourage everybody to go take a look. Again, that's Darwinium. They're great people. Everybody have a nice day. We'll see you in a couple of weeks.